All right, so today we're going to be talking about the semiconductor sell-off in the market, particularly SanDisk and MU. We're also going to get into the IPO of CXMT and my thoughts on that, as well as what's up with AMD, Nvidia, and a broader software basket that's actually doing very well against the sell-off. So SanDisk is now down around 46% since its high, roughly a month and a half ago. MU is down around 30%. And then AMD, Taiwan Semiconductors, and Nvidia are all down around 17% from their highs. So what's driving this sell-off? What's happening with the memory in particular to have it be so bad? And lastly, what's up with software acting so well during all of this? So the Chinese chip maker has been threatening, in investors' minds to take business from Micron and from SanDisk, particularly the DRAM market. They make around 7% of the world's DRAM, and they IPO'd in Shanghai, and they achieved during this rally on their first day of 466%, which is absurd. Market cap of over 500 billion. Micron, on the other hand, captures 22% of the world's DRAM market and has a much higher end product, a higher tier product that captures a much higher margin. So Micron's much more profitable. It's growing much faster. It has a better product. Well, Micron is far undervalued for its share, for its percentage share compared to CXMT. So CXMT, is very overvalued at this point in my head, and that's before you even get into the idea of investing in Chinese markets, which I think is absolutely crazy to begin with. Next up, you also have SanDisk, which continues to take a hit, and a lot of this I think is really driven by momentum of huge amounts of money flowing into semiconductors, and eventually, as the returns peter, the momentum traders look for the next big thing somewhere else, and so that momentum money, I believe, is starting to exit, and it's going into the next thing. Software is starting to gain a little bit of momentum. We see Salesforce. It's July 27th today. We see Salesforce up, 5%, Shopify 8%, Workday 8%, even Microsoft's up 2%. So the market's coming back in some of these names, which have been hit pretty hard this year, despite great growth and great fundamentals. But I would say that right now, Micron is growing at 345% year over year. They continue to beat estimates by a large amount, and they have a PE ratio of 8 to 9 using their last earnings per share. SanDisk is a little more highly valued at a PE ratio of maybe 13 and is growing at a little bit less at 250% year over year. So this is some of the best growth in the market. You need data. You need a ton of data for AI. So for AI to work, it needs data to train on and it needs data to reference. So if you ask AI a question, it needs to be able to look back in data and come up with an answer. And so to make AI better, which we need to do, we just need enormous amounts more data. At the same time, there's going to be self-driving cars, there's robotics that are rapidly advancing, and all of those things need enormous amounts of data. So how can AI utilize data? Well, it has to be stored in memory. So in my opinion, you need a lot more memory. And I looked back at how semiconductors have done over the last decade, and the industry is growing by 6x. So the semiconductor sales over the last decade have been one of the best long-term growth stories in the market. But the way AI and robotics is accelerating right now, I really imagine that the next decade could be even better than the past decade. So Jensen Huang was on an interview yesterday, and they asked him, what do you think the growth will be over the next decade? And he said 10x. And in some ways, I actually think that that's a conservative estimate based on the growth we see today in this market. Software at the same time, I believe, continues to have great potential, basically from AI agents. And so software has always been limited by the number of people sitting in a seat. The labor cost is very expensive in software. Basically, you pay an employee maybe $100,000 a year and they use a software subscription. So the true cost of using the software is not the subscription that might cost $500 or $1,000 a year, but it's actually the labor cost. So now one employee can subscribe to many more softwares because of AI agents. So somebody like me could make a YouTube video and subscribe to a software and have the software AI do the work for it. So before, it would be too timely and costly for me to come and edit my own thumbnail and edit my own video. But now you can have AI agents do that for you, which means that you're more likely to subscribe to enterprise software and drive higher demand, because the biggest barrier to entry was never the subscription cost. It was your own time and that cost associated with your human labor. So, I think that there could be great growth in the software market. I believe the market's starting to wake up a little bit to that. And some of the best names out there, I believe, are companies like Shopify, and are companies, whether it's like Toast or Microsoft, that they have the opportunity to sell many more subscriptions at possible, and additional subscriptions come at very high profit margins, close to 100%, right? Like, how much does it cost Microsoft for one additional Microsoft Excel subscription? Nothing. So I believe these are high profit, high earnings growth companies that have very reasonable valuation metrics today, while semiconductors are even higher growth and even lower valuation metrics. So I believe both of these sectors are very promising. And today, where we see a sell-off in semiconductors continuing, I'm not too concerned because the fundamentals are so big, and I'm not somebody that invests or trades off of fundamentals, or off of momentum. I mean, I invest off of fundamentals. So the fundamentals continue to improve, and that just makes me very excited for the future. So thanks for tuning in today, and like and subscribe, and I'll see you guys next time.